right, good afternoon, guys. I think what we'll do is just go over my recent performance over the past month and, a bit about how we trade in the trading room, this new Analysis Live service that we're launching next week. And I'll show you kind of how that works and the forum on the website where all the screenshots are posted. And then we'll just go over the details of the last sale that we're going to have before we change our pricing. So starting this year, we're going to move to a lease model instead of this lifetime single payment. So this will be the last time that we offer the lifetime account for the tools and everything. So, all right, before we get into all that, obviously trading is incredibly difficult and it's very easy to lose not just your entire account, but even more actually. So don't trade with your lunch money. Only trade with money that you can afford to lose. And it's definitely not easy. All right, so this is the toolbar, the latest one. Before I get into my track record, let me just show you a little bit about this because this is really the backbone to how we trade. So this is a really massive update for not just the toolbar, but the workspaces and templates and everything, but the toolbar especially. And this is really what enables us to trade as we do, as well as we do, and as to be able to perform this kind of analysis as quickly as possible. So this is basically the entire, well, let's say the majority of the reason behind everything that I've done here has been to make this form of analysis as easy to apply as possible. It's really fairly intensive performing this type of analysis. It takes a lot of time and effort and energy. So when I first started working in Ecuador at this firm, the market geometry and volume analysis, basically Wyckoff style volume analysis and pattern recognition. That's what the guys were using in Ecuador, and they were doing pretty well consistently, 10, 12% a year between, I think it was like 8 and 15% over 10 years. So I knew that at least, watching these guys trade and the consistency that they achieved, I knew that there was definitely something to market geometry, just trend channels and median lines and the volume analysis, but performing that type of analysis on intraday charts to be able to day trade, it's just, number one, for the market geometry style analysis, it's just too time intensive to apply that, to be able to draw the trend channels on the faster charts, mark everything up properly, and then hopefully move on to the next market. It takes a lot of time. And I wanted to speed that process up, number one, but then I also wanted to be able to access all the analysis that I'm doing on these charts programmatically. So I wanted to be able to combine everything into a strategy and automate as much as possible. And I'm actually using a tool called Bloodhound to do that. So I'm, rather than programming the strategy out from scratch, I'm piecing together different components of it into these Bloodhound templates. And this is an example of one of those. So all of the rules for the location of the trade and the time frame that the trade occurs on will be in one set of templates. So this is a template that will identify when and for how long. So which bars I'm allowed to take a trade, long or short, on the 15-minute chart. Okay, so when I recalculate this, you'll see how this works in a second. It's going to show me recalculating. So these Bloodhound templates will update for the historical bars. It'll show me when, during what period of time, however many bars in a row, I'm allowed to take a trade on this 15-minute chart. And then I've got one for the 2-minute, the 5-minute, and the hourly. And then I have another Bloodhound template that will give me a long or short signal when the market geometry has come together. And that would be part 2. So it's essentially a 3-part system. I want to first identify which bars I'm allowed to take the trade during and on which time frame those are occurring on, between the 2-minute all the way up to the hourly. And then when the market geometry comes together, so I need one area sloping in favor of the trade and then another area sloping against the trade. So when that has come together, the two different areas, then I'll get a long signal from that Bloodhound template. And then when I have, depending upon which chart the trade is occurring on, if it's, for instance, on this 15-minute chart, well, then I need a specific number of volume and momentum divergence signals from the operative time frame chart down to the fastest chart. Okay, so for instance, here for this long signal on the 15-minute, this Bloodhound template is telling me that during these 2 bars right here, I'm allowed to take a trade setup on this 15-minute chart, meaning that this 15-minute chart will then be the operative time frame for that trade. Okay, so because the operative time frame is the 15-minute chart, well, then I have a certain set of conditions that must come together and be met, be true, before I'm allowed to take that trade. Okay, and those charts would include this 15-minute all the way down to the 2-minute, and then the faster tick-based charts, the tick and the row bars, and I'll show you those in a moment. So that's what I mean by a 3-part system. It's identifying the operative time frame, and I'm using this Bloodhound template to do that. Like I said, I have one on each of the minute charts, from the hourly down to the 2-minute, and then depending upon which is the operative time frame for the trade, then I have the confirmation from the volume signals and the momentum divergence for the confirmation. Okay, so when those two come together with the areas in the market geometry, then I have enough for a trade. Then all the rules have been met for me to then initiate the trade. Does everybody understand that? Does that make sense? So one of the pieces that seems to leave people, I guess, the most incredulous is that I use Elliott wave, and for some people that has a really negative connotation. I don't know if it's because they used it and found it to be useless or worthless, or maybe they've read what other people have written about it, people that have supposedly tried it and quote unquote proved that it doesn't work or that it's useless. For those people, that might be true, the way that they applied it. For me, I mean, I know, beyond any shadow of a doubt, I've proven this with several different track records, and I'll show you my latest one in a moment. But it's definitely very useful. I think it can be used the wrong way, inappropriately, and the way that we're using it, I think you'll find that the way that we are using it is actually quite beneficial. It puts all of this in a context. So I think the main way that people misuse Elliott wave is that they maybe they're trying to anticipate the next move or where the end of a trend is likely to come in. That's not really how we're using it. We're using it to find the ends of the corrections only, and the main count, we may get that wrong every single time, but finding where the ends of these little corrections will come in. And I say little, it's relative to the chart that we're looking at, obviously. But that's really the key to how we're using Elliott wave. It's really the key to how we're able to identify these corrective waves before they happen and into the very end of them, and get into the trade as close to the end of those corrective waves as possible. So that's really what it's all about as far as using Elliott wave. It's purely for identifying the corrective waves. We're not trying to pick a top that's been the top in a market that's been moving up for weeks and weeks and months. We're not interested in doing that. We're interested in finding these little retracements in here. Okay. And each one of these corrective waves, each individual one will have its own nuances and kind of personalities, I guess you could say. But the very end of each of the different types of corrections that we see over and over and over, the very end of those corrections have a recurring pattern that's actually recurring to a degree that you can work those probabilities in your favor. A lot of people think that they've found some sort of recurring pattern that they can then make into a profitable system. The fact is, most recurring patterns that you think you've identified that are going to help you in creating an edge, a profitable trading system, they're nothing more than random patterns that we see recur over and over and over, because that's what we do. We seek out patterns, we identify patterns in just about every single thing that we do. And in trading, it's no different. But the problem in trading becomes when you start thinking that those recurring patterns that you're seeing over and over actually recur in a way that gives you a probability of the next result or the outcome of that pattern that you've identified greater than 0.5. And that's usually not the case. Most of what people think they've identified as a profitable pattern is nothing more than just a purely random event that is really mostly the function of the number of bars that make up the pattern, or the period of the oscillator, or whatever indicators they're using. So I think that's the biggest misconception when it comes to trading systems and just building trading strategies in general, is most of what we think are profitable patterns are nothing more than random occurrences. So back to the actual corrective patterns that we're trading, the ends of these patterns, those come in with, depending upon the time frame, the faster the chart you're using, the more random, how do I say that properly? Essentially, the faster the chart, the less useful volume becomes. When it comes to volume, you really have to have enough participants within the candles, within however many bars you're looking at, for it to not be random, if that makes sense. I'm not saying that in the way that I would typically try to, but the more participants you have in a candle and the more volume you have in that candle, the more likely, when you get some of these exceptional volume signals that we'll go over here in a few minutes, the more likely that signal is going to actually hold. And the faster the chart, the more random those signals in the volume become. So if you if you want to take and apply what we've done here, which is really focusing on, like I said, between the 2-minute and the hourly charts is the operative time frame. I see a lot of people do this too. They'll take this and then they'll try to apply it to even faster charts, and it just doesn't translate that way. There are only so many bars that make up each session, and once you begin dividing up the sessions into time periods, which is what we're doing with the bar charts, then you really only have so many bars per session. And once you have divided that up so much that you're getting into the thousands of bars per session, then your sampling of the data just isn't, I'm not saying that quite right. I am a little sluggish today, so bear with me, but you have to have enough data within each bar for it to be useful. And the faster the chart, typically the more random the data. And that's especially true with volume. So, and I'll come back to the volume and why we've done what we've done with the relative volume. But let me first do this, because this is really all most people are interested in. Show me the results. I don't know if I'm just totally inept or what, but I have not been able to get the commissions that I put in to actually show up in here. It's totally different than it was in NT7, and I just have not been able to sort that out. So what I did, let's see, it was November 25th, I believe, the day that I got my new computer, and I wanted to start a new track record. I'll just show you from November 1st, just so you can see that it's current. I wanted to start a new track record with a $10,000 account, and I wanted to take, before I start trading live again, which I'm planning on doing here, maybe not Monday, but by the end of January, I'll be trading live again in the trading room in front of everybody. So I wanted to give myself at least a month, hopefully 6 weeks, which I think it's probably what I'll end up with, about 6 or 7 weeks, where I'm actually trading sim again and, getting back into the rhythm of being as serious as I possibly can at this, which really you have to be. You can't, can't half-ass it at all. It's a pretty difficult endeavor, as most of you guys know already. So I wanted to really focus and, treat this next track record as if it were a live account, and hopefully be profitable by the end of it. And then, I'd be much more comfortable going live again. So I stopped trading live. Actually, I think it's been close to about 2 years, not quite 2 years. And I did that because I had taken a live track record, and I took it from $5,000 to $29,000. And then I tried to break 30 before my next big sales webinar, trying to be a Mr. Cool and break that 30,000 number. And then I got into a downward spiral, and within 2 days, I think it was about 4 days actually, I lost about 15% of the account in a a very, very short period of time. So I decided to stop. I was going to get everything moved over to NT8 as quickly as possible. I was thinking it was going to take about 12 months. Ended up taking about 25, 26 months. And I wanted to get the trade management side of it as automated as I possibly could before going live again. And I think I've finally gotten that down, at least, acceptable enough to where I'll finally be comfortable letting the strategy handle the trade management. So I'll continue to enter manually, but then I'll let Blackbird, this strategy automation tool that we use, I'll let Blackbird and the rules that I've put into those trade management templates, I'll let that completely manage the trade after the entry all the way up to the exit. So I told myself I wasn't going to go live until I had all of that done, until we had development on NT8 done. We're finally there. So this is my first attempt at trading a sim account after not doing so, not running a track record. I've still kind of taken some trades sporadically during the trading room, but the minute the trading room has been done, I'm strictly focused on development and getting everything working right in NT8. So now that that's behind us and I'm about to release this really massive update for all the tools in NinjaTrader 8, all the new workspaces, and everything's working properly. It's all completely stable. And so yeah, now I'm finally ready to go live again. And this is my first 4 weeks, I guess it's been as of today, trading in sim. So I wanted to start with 10,000, but I forgot to set the account. So I think the account's actually at 100,000, the sim account. But anyway, this is only, it says 47. Each of these trades is either 2 contracts or 60% of them will be 2 contract trades. I think about 20% will have 4 contracts, and only 1 or 2 of those trades will be 5 contracts. And then maybe there's 25% that are 3. So most of these are at least 2 contracts. So that would be probably a total of 24 trades, something like not quite 24 trades. Okay. And when I went over this track record, I guess it was Black Friday, or when was it? Last time I actually went over it in detail. I think it was a training session or something, but my percentage of profitable trades was way higher. And now it's actually approaching what it would be over time. So over time, I get pretty much right between 46 and 48%. When I was in sim, I'm talking lives, that's 46 to 48% profitable trades, trading live. When I was doing that in sim, it was well over 55. It was like, I think it was 55 to 59 or something like that. So yeah, you do tend to do a lot better in sim than you do live, but if you can't treat fake money as if it actually were real money, then you're really never going to be able to get the hang of trading live and actually treating real money with the the respect it commands. So this is my best attempt at actually treating a fake money account as if it were really live money. And you can see my winning trades are way, way larger than my losing trades. My losing trades are never more than about 22, 25 ticks per contract. And then the winning trades are, anywhere from 5 to 1 to 15 to 1. So anytime I'm entering a trade, I think this is the best use of Elliott Wave, really. And that's what a number of guys, professional fund managers, will say as well, that it helps you put risk to reward um, in a kind of a framework. It helps you limit your risk and maximize your reward potential, really like very few other things can do. And it helps you gauge where the market is likely to make it to, uh, given whatever trade that you're entering. So, for instance, here on the 15-minute chart, if I'm buying this low here as a fourth wave low, well, then I know my target should be at least above the end of this third wave, right? And in the context of market geometry, or putting Elliott wave in, or sorry, putting market geometry in the context of Elliott wave, you could say the other way around. I know I need to trade up to at least the top of this channel, this parallel. So that's at a minimum where the market would make it to if it actually turned into a fifth wave. But then beyond that, what if it fails? Where is it most likely to fail? Just a small break of that B wave high is where I'll take my first half of the trade off, which is only one contract and a two contract trade, obviously. So it not only gives me, a great idea as to where my targets should be, and then where my stop needs to be. If it's going to overrun the area, and this is just a simple trend line, if it's going to overrun it, I need to give it, just enough room to throw it over, but not so much that I'm losing, more than is actually necessary on a given trade. So it helps me put the R multiples in my favor, maximize my reward given the risk that I'm putting on the trade initially. And over time, I haven't found anything that comes anywhere close to this. And I've tested a lot of systems. I've built a lot of systems for a lot of different people, and I've never seen anything that has enabled anyone to achieve results that come anywhere near to this. So I've spent a lot of time building all this out, doing all the testing, building all the tools to make it possible, and trading a lot of fake money, trading just a little bit of real money, because I've blown through a number of live accounts in the past. I didn't want to trade a large sum of money. Well, for one thing, I don't have that right now. Hopefully, I will soon. But I didn't want to put that kind of money that I have in the past at risk without knowing for sure that I could actually do it this time. And I say this time, it's taken, I guess, about 4.5 years to really hone this thing down and become completely confident and comfortable in executing this and trading it properly. So now I'm at the point where I'm actually ready to go live again. And when I do, I'll start adding some size. So any questions on any of this? I'm sure you guys probably have some questions. Let me just read through for a moment. I see, okay, a number of you guys have helped me out with the commissions thing. Yeah. Let me just copy that out of there real quick. I'm sorry, this is so informal, guys. I'm really just feeling pretty horrendous today. I'm actually feeling a lot better than I was a few days ago, but I'm still struggling here. So this is only, well, let's see. Will it show me all that? This is only crude oil I would, I've been saying this for a number of days that I'll have every one of these trades up on YouTube before the next webinar. Yeah, well, that didn't happen obviously, but I do have a lot of it edited, almost ready to go. And so I will have every one of these trades up on YouTube. What is today? Saturday, definitely by the end of the weekend. What I'm doing next is getting the update out first and foremost by the end of today, absolutely by the end of today. And then I'll be putting these edited recordings of the trading room where I'm actually taking these trades live, explaining why I'm doing it, and then managing it to the exit. A couple of them I didn't initiate during the room. The very first one that I did was actually on the 27th of November when we were doing I think that was the Black Friday event or something. And I couldn't help myself. I started the track record that day. So I took a short in crude and then exited the next day. That was a massive first trade, which was nice, but you know, bit of luck there. But anyway, it's mostly crude oil and the ES. So it's only crude oil and the ES actually. Yeah, I used to trade crude, the S&P, 6E, and gold. And I'll probably add back the 6E and gold next month. But for right now, these are the main two markets that we're doing during the trading room hours, and these are the main two markets that we'll be doing for this analysis live service that I'll show you here in a moment. Let me just, since I'm talking about that right now, let me just go ahead and show you that, because that really is pretty cool stuff. Yeah, see, the first trade was actually, you know, you could, let's say that that one didn't happen. Well, that would eliminate it in half. Just about, right? Yeah. And the only real significant loss that I've had was actually the last two trades. So I had two losers in a row. I tried to short what I thought was going to be a lower high in crude twice in one day. The second one, I actually just lost a little bit. I thought it was at least going to break even because I had the trailing stop in place. But by the time it was hit, it hadn't moved down any lower. So I ended up losing like 3 or 4 ticks or something. We can go over that one here in a moment. So I can at least go over a couple of these today. And the majority of the ones in crude will be from the previous contract, though. Anyhow, I'll definitely have these trades up on YouTube here shortly by the end of the weekend. I may extend out the sale by a few days. I know we're saying that we're going to end it on January 2nd, but seeing as I got some bug or food poisoning or whatever and was down for a couple of days, I'm probably going to extend it for 2 or 3 days. Let me just give you guys this link before I forget. So what I'm doing every morning during the trading room is I'm working up these charts. I'm drawing in all the market geometry, and just to show you what that looks like. So I can hide everything. I can bring it back one by one. I can do it. It's crazy what I can do with this thing. I can essentially create templates for as many different instances of each of these functions or buttons as we have here. And I can apply alerts to any of those lines. All of these areas and lines and even different colored lines are all accessible by strategy or currently by data series, meaning we can access it within Bloodhound, but shortly, within the next month or two, it'll be accessible by custom strategy as well. But a number of different tools, functions, whatever you want to call them, everything that I would love to be able to do, you know, fully integrated into the platform that I'm using, these tools just don't work that well that are native to Ninja, and it's really kind of clunky and difficult to use. So what I'm doing, rather than having to draw market geometry, trend channels, median lines, all of that with one tool for the trend channel, one tool for the median line set, I can do both at the same time, like so. I can use hotkeys just like you can for Ninja with the Ninja tools. I can use hotkeys to apply those. So if we're going down here and possibly making another fourth wave low before going back up, then I know that this will be the next major spot where I'll be looking for a retracement. If it doesn't come down that far, well, then this would be the spot just before that right here. So I know where my next two areas are that I want to look for the next potential long in the ES. I'm kind of thinking that a pretty significant high could already be in, maybe not. It does kind of look like a little ABC down right now, so I might be wrong about that, but either way, I'll likely take this next long setup. If we come down to here, and then if we break through that, I may think twice about trying to buy this next one here. But you can see, as of this new low here, I'm now able to begin looking for a long on this 15-minute chart again here. So as we work our way down, I'll be able to take that long probably up until the point that we break this low, and then it would be considered a long on the hourly chart. Like I said at the beginning, each of these time frames has a specific set of conditions that must be met before the trade can be confirmed. And that's, I think, as far as it goes for someone learning the methods from scratch, I think that's the most important thing that these Bloodhound templates do. It helps you kind of break the system down into 3 different pieces. And then when each piece is met, you'll see, the green for the long or the red for the short. And then when they all 3 line up, well, then you've got all of the rules that must be met, have been met for that next possible trade. So I think that's the main benefit that breaking it down, this thoroughly gives you guys, is actually helping you to learn the methods and kind of know when one piece is maybe not coming in and the other ones are, kind of thing. So also will help you kind of troubleshoot when you're not getting the signal and you think you should be, because it's then broken down into 3 independent sections basically. So you know which one is holding up the trade. Let me do this real quick. So as I started to say, I'm doing all of this analysis in real time during the trading room, and then I'm exporting it. So let me just get this ready for Monday real quick. So this is the first major spot to the downside right here. I would allow a throw over of that down to this yellow line, trend line, and then a slight break of that prior low. So maybe I would start getting into this depending upon, if we actually get the volume and divergence confirmation on the faster charts. I would begin getting into this at probably 24.50, 25. And then I would want my stop behind this yellow line. So maybe I'll get into 2 at about 32.24, 25, and then 2 more right around this previous low, and then my stop just beyond this trend line here. Okay, and then my target would be above this high, probably all the way back to the top of the channel, but then I'll take half of it off when we break this B wave high, what looks like a B wave high. So right now, if I were counting this out, I would be looking for say an A, B, C, 1, 2, 3, 4, 5, something like that. Maybe it'll end up being a double 3, but something like that. And then that 138.2 is our most common extension for a zigzag or a flat. This would have to be a zigzag. And then I can apply right here, and I can get a screenshot emailed to me. When we get within 10 ticks of that, you can do all kinds of crazy stuff with these alerts. It's a pretty awesome alert system. You can kind of make it into like an alarm clock and just keep ringing until you come in and click on it. Wake you up out of bed if you want it to. And then on the faster tick charts, I would line this up and have my downsloping areas, and you can see they're all coming in right about there. So once I get it ready, then I'll hit my little hotkey and I'll export it. And you see it's exporting now. And then whoever's logged in and signed up for it, everything that I've just exported will show up on your computer, on your NinjaTrader workspaces. And then it'll actually show up a screenshot of it in our forum right here. So this is for crude oil. So really the only difference between Analysis Live and the trading room will be that for a little less money per month, you can get all the analysis from what I'm doing in the trading room, all of the market geometry, everything I'm doing on the charts. You can get all of that exported directly to your charts, but just not hear the the thought process behind it and any of the teaching that may go along with a particular setup or some kind of scenario one particular day that I may go over in detail. So that's really the only difference. With the trading room live, you'll have the my commentary to go along with that. With the Analysis Live, you'll only have the actual objects, the actual marking up of the charts exported and then populated directly onto your computer. So that's the screenshot of it right there. And then let's see. So that was the 15-minute chart. And just to show you what that may look like for you. Whoops. Sorry, these hotkeys aren't working the right way, the way that I have this webinar set up. All right, so this is a virtual machine that I have here. So it's a separate instance of Windows on my Windows machine. So let's say that I just delete all of this. So the way it would work for you is you would have this import manager here. And as long as you have your emails set and your subscription is active, this is the email for the alerts. I'm not going to worry with that right now. So as long as you're signed up for it, let's see here. And you've got this set to auto import, and you can make it replace the analysis that you've done yourself, or you can make it merge with your own analysis. And I'm going to have mine colored just slightly differently than the version that I'm sending out to everyone. So you'll be able to tell the difference essentially. And then if you delete some of mine and you don't want those to re-import, then if this is set to skip the deleted ones, then whichever of mine that you delete, it won't then re-import, if that makes sense. So there's a lot of customization you can do with this. It's pretty awesome. So let me re-export this one. Okay, that's going to the server now. And there it is. So now it just imported. I think I didn't delete my cache on this virtual machine, so the data is probably a little screwy. That's one thing about what we're doing is data becomes very important, and you'll start to notice little discrepancies in your data once you begin, actually doing market geometry and keeping track of certain waves and prices and stuff like that. You'll notice that your data feed may not be getting the right data sometimes, or Ninja may just be, I don't know what it's doing in there, but sometimes the data gets kind of out of whack. And you'll then begin to notice that if it happens, because if it has a bar missing or something like that, then the anchor point may be off a little bit. But as long as you have good data, which means kinetic or IQ feed, then that shouldn't be a problem. If you're using CQG or what's the other one, Rhythmic, the only thing that you may need to do is delete the cache once a week or so. And if you stay on top of that, delete the data cache every now and then you should be fine. And we can show you how to do that. We've got guides on all that, and Cedric can get you set up with our Ninja Manager tool, which can do all that for you automatically every single morning. So it's really not a big deal to get this set up. We'll set it up for you initially anyway, and then to maintain it. It's now that we have it all working properly and everything's smoothed out and consistent and stable, it's really a piece of cake to keep this working properly moving forward. So that's basically how it works right there. I'll mark everything up. I'll export it. It goes to the server. Then it shows up on your computer. And then all of these areas on all these different charts per market, and we're, like I said, we're just doing S&P 500 and crude oil. It's all active within these Bloodhound templates. So here, it's on the tick 1. There it is right there. This is the Bloodhound template that's accessing all of the areas in the market geometry and the yellow trend lines and all of that. So when we have an area coming together that's downsloping in line with another area that's upsloping, then we'll get the signal. And this is what produces that. So while Bloodhound and Blackbird is not, it's not imperative that you have it, it does make doing this type of analysis a lot easier. It at least shows, an actual green or red stripe when you have all the rules coming together. Otherwise, when you're starting off brand new and you're trying to learn all these different rules and you've got all these different charts, it can be a bit overwhelming. So I think with the use of Bloodhound, it makes it a lot easier to learn, and it should shorten the learning curve by quite a bit, the way that I have it now. So as far as a recommendation, I'd have to recommend Kinetic or IQ Feed, but Kinetic really is IQ Feed. It's white labeled IQ Feed, and it's a lot less expensive. So I would definitely recommend Kinetic over any other one. I think it costs $63 per month for all the futures contracts. So Otherwise, I think it would be about 150 or 140 for IQ feed. Hang on a second. I have to hit the wrong hotkey again. All right. So the last trade that I took, let's just go over a couple of losers, huh? Let's go over some losers. Hang on a second. I mean, why not? Everybody always goes over winners. You don't learn a whole lot when all you do is look at winners. So let's go over a couple of losers. By the way, each of these main buttons here is actually a group of different buttons. And there's hotkeys for every single one of these. And once you get it set up the way that you want, you can actually print the hotkeys. So I'll click this button. It actually copies it to, actually copies it to the notepad, or to the clipboard rather. And then you can paste them out right here. So these are all the different functions or buttons that I have, and all of the associated hotkeys. The big ones, the ones out to the left justified, are the grouped buttons, the main grouped buttons on the main panel. And then the ones that are indented are the individual functions or buttons for each of these different groups. So here you see I have a group of volume profiles and VWAPs. This is a group of the market geometry and trend lines, baselines. This is a group of fibs. Tells you the settings, the name of it, and the associated hotkey. Multiple different function type buttons that control the zoom of the chart, whether you're zoomed in or zoomed out. You can actually set different zoom sizes to where you could click on the chart and it would automatically go to like this size, or click it again and it'll go to this size. So I have it to where it's, with each click of a certain button, it'll zoom in at intervals. One of the things that slows Ninja down the most is the actual zoom of the chart, because it's so fluid. It takes a lot of resources to redraw that chart. I think it's redrawing it like literally every single millisecond as you're doing that. So rather than making it, 100 different redraws of the same chart, I just make it 2 or 3. So I've tried to make Ninja as efficient as it can possibly be. And through the development of this toolbar, I think we've really achieved a pretty amazing feat for this platform. So just to go over that real quick, again, you've got individual groups of buttons. This is the workspace group. So I can click this and it'll just cycle through to the next workspace. Or I could click the actual workspace name. It'll show that one. And this is actually handled much, much better than Ninja flips the work. The way Ninja flips the workspaces is a little bit odd, but anyhow, you can store as many different workspaces here as you want. This is the desktop. This is back to the ES. And then our newest feature is this window manager. So this is actually really, really pretty cool. I wanted to be able to demo it for you, but I don't have it set up in this one, because the one I'm sending out, I can't store the saved locations of each of my windows on my machine and then transfer that to someone else, because someone else may have 2 monitors or 3 monitors or 30. So I've got 8, but what this does, it allows you to save different positions. So I guess I can kind of show you quickly here. So let's say this is one position I want to save. So I'll right click to open this up, and then I'll click this little button here, and that'll save it and close it. And then I'll make this one like this. Right click on number 2, click that button to save it. And then I'll make this one number 3. Right click on it, save this layout, and it's going to save every single window that Ninja produces or can handle. And that would be, the alerts windows, the charts, the control center, the market analyzer, anything that Ninja produces. So now if I go back to 1, it'll bring all those back, and you can actually make it minimize all of the other ones. And if a chart is minimized, it actually uses less resources than, obviously if it were maximized and visible, it would be using the most amount of resources. But if it's maximized but not visible, it still uses more resources than if it were fully minimized. So if it's minimized, all of our strategy stuff will still work. All the indicators are still running and producing calculations and signals. But if it's minimized, you're going to use a lot less total resources. So theoretically, you could have more workspaces and charts open then. One other thing this does is it'll actually combine all of the different charts from all of the different workspaces you have open into a single kind of universal workspace just by clicking this button here. And then, if you want to close it and shut everything down and make it separate all those charts and windows back out into those previous unique workspaces, it'll do that for you automatically now. So it's really pretty exceptional, pretty awesome stuff. So that's one of the main things that's taken me a little extra time in this update. You see how it's shuffling through these windows now? Isn't that cool? So you can make it do whatever you want. As many different windows on as many different screens as you want. But the thing that's taken me a bit longer with this update is that I've combined all of the charts from the ES and the crude oil workspace into a single unique workspace so that you don't have to worry about, combining all the charts together with this button here. And then it separating them back out when you close it down. I've actually got them all combined. So starting next week on Monday, I'll be using that combined workspace, and I'm sure most of you guys will be too in the trading room. And then once you get everything kind of set up the way that you want it, you can just save your layout. And then, the way that I'm going to be doing it, basically I'll have all of the higher time frames showing for one layout, and then all the faster time frames showing for another, and then kind of a mix of each one for some of the other ones. So 8 might be a little bit too much, but you can start with 8 and then eliminate whatever you're not going to use. So this is actually pretty important. This is a really important piece that I've been wanting for a long time that we just haven't been able to do until now. So yeah, where was I? I guess I've been all over the place. Let's see if I can come back and let's see. Let's talk about this last trade that I took here. That would be this one here. Yeah. All right. So at this high, we were thinking, well, I was thinking that the high could very well be in because we had a really nice rejection down from this trend line here. You see it, this big yellow trend line here on the 30-minute RTH chart. We had made it back to the top of this big upsloping channel. all these fib confluence zones here. So I was thinking, okay, this could be the end of it. Finally, here at this big downtrend line, we turned down from it really, really quickly. And then as we turned back up, we had only made what looked like 3 waves down. In hindsight, it's an ABC, but I was thinking, well, we could be making a 4th wave high here. Whoops. 4th wave high right in here, right there. And so I want to catch that next wave down. In fact, what we had turned up from here was actually, was it right here? Yeah, it's just a perfect channel that we had found support on right there. So I was thinking we were going to break through that and head lower, at least a little bit more, even if we were going to head back up. But in fact, we didn't do that, and I got stopped out. But I didn't lose on the first trade. I lost pretty much the full amount. But on the second attempt, I only lost, I think, 3 or 4 ticks. And well, we can see exactly how much. Let me get a faster chart. Let me see which is the fastest I have. That shows it, yeah. So it was right here. So this was the first attempt at the short right here, as a potential triangle for the end of that 4th wave, which would be, let's see, let me just hide all of this. It'd be like so. And that was going to be potentially the end of that little ABC for the E wave of a triangle. So I took a full stop on that one. And then this was my second attempt at that short. And you can see the market geometry came in. Well, you can't see it on here, but you can see the actual bloodhound signal. Market geometry was all lining up perfectly. We had a huge, huge signal in the volume. And that's one of the things I want to talk about next is this relative volume on the tick charts and why that's so powerful. But what it ended up doing was it came down in another little ABC, and then it turned right back up. So it actually ended up coming down about 30 ticks, I believe. What does that say? Yeah, 30. So I guess I was short for about 25 of those. But yeah, by the time I went to sleep, it was still right about in here. And the stop was just about even with my entry. So I'd already tightened up the stop by quite a bit. So I knew I wasn't going to lose too much. And you can see that right here. So even if I'm taking a trade outside of the trading room hours, I'm at least now, for sure, I'm making sure that I do this for every trade now. I'm at least marking up everything and exporting it and making it take a screenshot and sending that to our forum here. So this is where I entered it live in real time right there. So you can see the big down sloping channel, right? And then the up sloping smaller one. So just on this one chart, we have enough coming together for that short signal in the market geometry, which I think it's not showing up there because I was in the middle of tweaking it, and then I had to reload it and then recalculate it, and then this is where it starts showing up. So I was actually working on the update in real time when I was watching this set up, and then I finally took it, right about in here. This is the initial placement of the stop. I immediately tighten it up much, much tighter than that. And you can see I was trying to get into a third one there, which I did end up getting filled on. It's about to get filled on that third one right there. And you can see here in the volume, this is the relative volume on the tick charts. So this is not something that anyone else has, or I don't think it's anything anybody else could even do, really. The amount of time it took to figure that out and make it work for tick charts is just ridiculous. But what it does is it's looking at the number of contracts that trade for a given bar. So for instance, here on the tick chart, if that bar at the high takes up about 20 seconds or 25 seconds, let's say, it's going to look at that time of day, that 25-second period over the past 8, 10, 12 days, whatever it is, whatever you set. And it's going to find the average amount of volume that traded during that 25-second period. And it's going to compare it to the current 25-second period. It may not sound that complicated, but when you're using a tick-based chart, which is not a minute-based chart, where you don't know, when that bar is going to close, so you really have no idea whether it's going to be 25 seconds or 250 seconds or whatever. You have really no idea. So the way that we're doing this to be able to get the relative volume on tick-based charts, non-time-based charts, is we're actually projecting a kind of a most probable time period for any given bar. And then at the close of that bar, we'll find the actual true amount of time that transpired during that bar and update the calculation to make sure that it's 100% accurate by the close of the bar. So in real time, it's giving you the best educated guess as to the likely amount of time that transpired for the bar and updating with every second, accounting for the actual total number of seconds that have transpired. And that probably is confusing you big time, but when you look at this compared to the actual volume, the raw volume for a tick chart, I mean, for one thing, you're looking at total number of contracts per tick when you're putting volume on a tick chart, right? So it's useful information, but it's a bit different information. It's not showing you total amount of volume per time. It's showing you total amount of volume per transaction. So it's just slightly different information. But anyhow, here with the relative volume, even though the tick volume, the actual raw volume on a tick chart, this is just a simple volume indicator here, that's showing you decreased volume into that high. Whereas here in the relative volume, it's what we call a massive 2-bar pattern. So that's it's a buying climax is what it is. It's a big buying climax right here. Extreme density, so it's very high volume per range. So even though it's a wide-ranging bar, the volume is so high, the relative volume is so high that even when you divide it by the range of the bar, it's still exceptionally high. So that's at that point, I know for sure that we have hit supply. We've run into supply. I don't know for sure that it's going to stop, but I know that my chances of it stopping are much, much greater, much, much higher than if we didn't have that exceptionally high relative density, relative volume bar there. So if we had something like this into that area, well, I would have just watched it go right on by. It may have turned down from it in hindsight, and I wouldn't care because I know that with this signal, the chances of it turning down out of that swing high are much greater than without it. And that's really all I care about. It's all about stacking probabilities in your favor. And if you don't know what those are, or if you think you do and you are misleading yourself, which most of us do, it's what most of us do for probably the first 10 years in this industry. We tell ourselves a lie and we believe it, and we end up losing a bunch of money because of it. But with this, relative volume on the tick charts especially, it's the best confirming tool that we have. And when you get a bar like this, following a bar like that, then I know at that point we've got even more exceptionally high supply coming in. So I know we've hit basically a brick wall of resistance supply at the high. And that's what we call our little 2-bar pattern there. It's just a really huge it's a really huge high volume per range bar, which means when you divide the volume by the range of the bar, this bar is towering above all of the preceding bars. So I know that's about 4 or 5 times the size of the preceding bars. On average, it says it's what, 347%? So I know it's 3.5 times normal. Yeah, 3.5 times, sorry. But looking at those preceding bars back here, you can see these were much less than 100%. They were about 65. That says 93, 65, 54. So yeah, this is an exceptional 2-bar pattern into that swing high. I know I've got a huge amount of supply coming in. And what's more, I've got what we call volume divergence there. So at this high, we've got less volume at the final high than we had at this initial high. And you can see the momentum is much, much stronger at this high than it is at this one. And that's one of the patterns that we look for in the volume, especially at the end of a C wave or the end of an impulsive wave. If I can count, if this is a C wave that I'm looking for, if I can count 5 waves into that C wave high, and I've got volume divergence right into the end of it with a signal like this, then I know my chances of it actually turning down from that area out of that high are much, much higher than otherwise. And that's really the key to how we're confirming these areas. Sorry guys, I feel like I'm about to pass out. I'm starting to feel pretty rough here. But anyhow, even though the trade failed, and that's going to happen, it's going to happen a lot. It's going to happen more than I want it to. I hate losing. I hate taking a losing trade. Well, I can't say that I hate it. I used to hate it. Now it's just whatever. It's just a part of it. It's one of your expenses that you log at the end of every month. It's not anything to hate or to love. It's just something that happens. So even though it did fail, or let's say I took a loss on it, I didn't lose that much on it. I only lost 4 or 5 ticks or something. Hang on a second. Where's my? Well, we can see the actual entry price. I think it was 74. What does that say? $74, yeah. Yeah, it's only lost 3 ticks on 3 contracts, which is not much, But I mean, that's a pretty looking little trade there. It's everything coming together. The only thing that I didn't like about it was the fact that I had already taken one loss on it here. And this, if this is the fourth wave relative to that being the second, well, then that's just not, that's kind of a abnormal fourth wave. That's getting on the verge of being much too large of a fourth wave if that's the second. So I'm already fighting that. I'm already fighting it, having turned up out of this just picture perfect group of areas all coming together right at that low. And yeah, it was my second attempt at the same short. So I can't, I can't take three strikes at the same trade. I don't allow myself to do that anymore, but I will take two. But this one had a lot going against me. So anyway, I at least wanted to show you a couple of trades, even if they are losers. They're the most recent two trades that I had. And I don't know, I see people do, show you all their winning trades and that's it. And that's just totally unrealistic. So figured I'd at least show you my last two trades, regardless of what they were. And they happen to both be losers. So there you have it. I do have, like I said, those videos of all of these trades going up. I doubt it'll go up tonight. I'm getting this update out before I put that video up, but they will be out by the end of the day tomorrow. But yeah, this update's going out for all my current members before I get that video up. So this is the link to the sales page. I'm gonna have to wrap it up here, guys. I feel like I'm about to pass out. This really doesn't do it justice as far as what all's included with this. Between the toolbar, the volume, and the divergence tools that we have, just between those three, to me, I think it's worth 2 or 3 times this at least. But just the toolbar and the volume alone are easily worth the price of what I'm asking for this. And I'm not a salesman by any means. In fact, I kind of despise marketing, um, at least in the way that it's become. It just seems so deceptive to me. So I'm trying to not do a long spiel on why this is useful, why this is great, and why you need it. As far as anything else out there that I know of, at least. Well, for one thing, I don't know of anyone that's out there actually trading in front of people. I think there probably are a few people, but I doubt very many. So there's that. Someone that's actually willing to, risk doing, and I could do incredibly poorly, and I could be sitting here with a horrible track record, and then what would I have to show you? I definitely wouldn't show you that, would I? So there's really no wonder that people don't show track records in this industry. I don't think very many people have decent track records in this industry. So there's that. But other than that, just the quality of the tools, I think, is second to none. And the fact that you can have all of my analysis directly to your own charts, that's pretty cool. I've never seen anything quite like that. So I wanted, to make it not only faster for myself to apply this analysis and to be able to trade more effectively and efficiently, but I wanted to also be able to help people that couldn't necessarily perform this type of analysis themselves, or at least get to the point, to where you could learn it, to where you could have enough faith in yourself to be able to apply it then on your own. But until you get to that point, have a bit of a crutch to where you're actually able to import my analysis directly to your charts, and then have Bloodhound and Blackbird be able to read those areas that you're importing. I mean, come on, that's pretty awesome. It's pretty awesome. If this were around when I were first getting into this, This would be a total no-brainer for me. I mean, I've spent 10 grand on garbage. I'm ashamed to tell you. I've spent much more than that on stuff not even a tenth as good as this. So James is asking, is this software valid for day traders on shorter time frames? How short are you talking about, James? So I'm taking trades on everything down to a 2-minute chart. So it's from the hourly down to the 2-minute. So I would say yes. There's some guys in the room, there's some guys in here that are members that have been in the room for a long time. But yeah, I mean, I'm taking trades from anything all the way down to a 2-minute on the ES, down to a 1-minute, all the way up to an hourly chart. So this template here, this Bloodhound template that I have here, you have it on the 2-minute, and I have it on the 5-minute, the 15-minute, all the way up to the hourly. That's just going to show you when you have enough coming together for that particular chart to be called the operative time frame. Okay, this doesn't mean take a trade. So you see I've got a short signal here. It's not a short signal. It's just showing me that this chart for these 2 bars right here is, it could be the operative time frame for a trade that may or may not set up during these 2 bars. Okay, so what that means, to say it a different way, is if I have a trade set up, if I have by chance the market geometry coming together right there, you see it doesn't, right? So there's no trade there. But if I did have the market geometry coming together right there, together with maybe the volume profile, and then I had the confirmation in the volume and the momentum divergence on the faster charts, well, then this chart would be called the operative time frame for that trade. Does that make sense? So if I took a trade here, if I had everything come together and it was confirmed, and I took the trade on this bar, this Bloodhound signal tells me that, okay, I call this trade then a setup on the 2-minute chart, because I've got the operative time frame signal right here on these 2 bars where I took the trade. So therefore I call this trade, the short trade, a 2-minute operative time frame for that trade. Okay. So then as I go out, I have another potential short, not here because it's moving up too fast, but on the next bar. But do I have the market geometry lining up there? I can go a couple of swings back to there. I've got one coming together there. Yeah, you might have had it in real time, but it definitely doesn't look good, especially out of that. It's got to be the crude report probably, or something. What is that? 27th. Not sure what that is. Some kind of report probably. Okay, but then here, once I break that high again, well, then I've got this 2-minute chart is now the operative time frame once again, and it probably would be until we broke that high. So if I then get a trade set up here, which I probably do have there, let's see. We've definitely made it to the top of the channel, and we're just starting to overthrow it. So if I have an upsloping channel, let's see. I don't have the upsloping channel per se, but I do have the 100% warning line. So that's effectively a valid short. So I would say that short is valid, and it looks like I probably have the volume confirmation there. I definitely have volume divergence there. So I would say that short is a valid setup, and it's a setup on the 2-minute chart. You see? So I'm taking setups from the 2-minute all the way up to the hourly chart. And if it's a setup on the 15-minute or the hourly, chances are I'm probably going to hold it overnight. If it's a setup on the 2-minute or the 5-minute, I'm probably not holding that overnight. In fact, I'm probably only holding it uh, between 2 and 4 hours. Does that make sense? Mosaico is it's a window manager, Omar. Uh, what did Raphael say about that? That guy's supposed to have been doing an update for like the past 2 years, but he still hasn't sent it out. So, but yeah, this window manager replaces any other window manager that you may have been using. So, um, there's a lot of different window managers. I think there's one kind of built into some of Dell's monitors. There's Mosaico. Uh, can't even think of the big one that everybody has. I can't remember the name of it, but there's a lot of different tools that allow you to save the positions of your windows in your charts. For some reason, a lot of those just don't play very well with Ninja 8's windows because they're a little bit unique. The header is not it's not the same type of header as most other windows because basically in NT8 they got rid of kind of the dual header. In NT7, if you remember, they had the standard header at the top, and then this row with all the tools would be just beneath that, right? So they eliminated that to give all of us more real estate. And so it made the window a little bit different. And a lot of those window manager apps don't play well with Ninja 8. So we made our own window manager built into the toolbar, and it replaces all need for any custom window manager, which is really pretty cool. I think that's probably what Raphael was talking about. So yeah, anywhere from trades on anywhere from the 2-minute all the way up to the hourly chart. So yeah, I'm doing day trading and swing trading all on the same workspace. And it really just depends on, what news announcement we may have coming out, if I'm going to hold overnight or not. Like on a Tuesday night, I may not hold any trade in crude through the close on Tuesday because we have that API report Tuesday afternoons at the reopen. And sometimes that can send the market moving kind of crazy. I mean, if I'm way up on the trade, then a lot of times I will hold through that report at the reopen on Tuesday afternoon, Tuesday evening, because a lot of times the reports will kind of send the market out from an area that we've already rejected away from. And a lot of times I've already entered the trade before that happens. So it all just kind of depends whether I'm going to hold it overnight or not. A lot of times I will. In my previous track records, I think it was something like 80% of the total earnings that I had made came from about 15 to 20% of all the trades. And it came from about 20% of the trades. And then about 80% of those trades, those 20%, were ones that I held overnight, more than a day. Okay. So the vast majority of the earnings that I had accrued came from trades that I had held overnight, where I ended up making, 10, 12, 15, sometimes 20 to 1. So I may have made 200 ticks on the trade, whereas I only risked about 13 or 14. And that's why my total number of winning trades on average, my percentage of winning trades, is typically going to end up less than 50. Above 40, but less than 50. But I'll still, I'll still beat the vast majority of people's track records out there because my R multiples on the trades are so high. So I'm risking a lot less to potentially make a lot more. So I have to be accurate a lot less at the time. All right, I'm going to shut it down. TJ, there is for the trading room to be the same one that we had there before that was emailed out. I'll have Cedric send that out tomorrow morning if I don't send it out here directly, but I'll have to go back and look at it. I think it was, let me just see here real quick. You should have received a few emails about it, but let me see if I can find it real quick. This is for those of you that are already members. To get a discount on the trading room. Those codes should work. I believe they do. If they don't, then I'll send them out here in a little bit when I get this recording ready. Yeah, John, for you guys, for sure. For everybody, I think probably until the end of that week, which would be until the 6th, I think. Yeah. Yeah, I think we're just going to extend the sale until January 6th. I wanted to get up a bunch of videos and stuff of all these trades and then have this update out, a week ago. Excuse me. So I'm going to get that done. I'm going to get the update out tonight and then get the videos up tomorrow, at least 2 or 3 of them. And then, then we'll probably do like an analysis live overview next Friday or Saturday. And I'll send an email out when we seal the deal on that on Monday. So we'll all get together on Monday and figure out exactly, the next 5 or 10 days. And then we'll send an email out Monday. And that next webinar we'll do probably Friday of next week on just the analysis live and toolbar and all that. And then by the end of that Sunday, which will be what, the 5th? Then no more discounts, no more sales. No, I'm not saying that at all, Jordy. I'm just saying that the added relative volume on the tick charts is giving some pretty dramatically amazing signals as far as I can tell. I just think it's some of the signals I think are better. And then, of course, that's why we have the row bars, because the minute charts give you one look into the volume, and then the tick charts a totally different one. And then the row bars gives you kind of the exact midpoint between the two. So if this is the row bars chart, let's just see the most recent long in here. Well, let's just say it was right there. So that's how many bars? That's 35 bars on this row 2 chart. Let's see. 32. 35. So what is that? How many minutes is that? It's a day. Ugh. So what's that going to be? An hourly chart, maybe? Oh, put it on the 15-minute anyway. Yeah. So here's a 15-minute chart. And that's 57 bars. So you see that's not showing up as much of anything there at that low. Granted, it is kind of low volume because of Christmas, but there's a number of different examples like this I can show you where you don't quite get the signal on the minute chart, especially in some of these smaller retracements on some of the faster charts. And then you end up getting just really amazing signals in either the relative volume on the tick chart, which is what this is in the lower panel. This is the relative volume, and this is the raw volume above it on the row 2 chart. So that's relative volume in this panel, and then the raw volume, just the normal volume. I'm saying raw as in RAW, raw volume on the top, relative volume in the bottom, and you get the volume signal out of the relative volume. And then here on the tick chart, you don't quite get the 2-bar pattern, that climax churn 2-bar pattern, but you do get a pretty big churn bar there, right? So on the 15-minute, you didn't really get any kind of signal there at all. You got a weak climax signal, but that's not really something I'm interested in trading. But to get an even number of bars, let's look at the hourly chart just to see if there's any difference there. There's just a difference between them. If I didn't have the relative volume on the tick charts, I would be missing some pretty important information. So I'm definitely not saying that, uh, you know, I don't know how to say that. I guess you're kind of taking what I'm saying and reversing it and flipping it upside down, but that's not what I mean at all. Let me see if I can find this hourly chart. Goodness gracious, what have I done with it? Here we are. Yeah, well, that's not going to line up. 4 divided by 56. No. So it's just totally, it's just different, especially when you're talking about the moves in the overnight into a new day session. When you've got some bars in the overnight and then some bars during the day session, it's just totally different looking price action when you get on a tick chart compared to a minute chart. But see, if we looked at the 5-minute chart, then we probably do have some kind of a signal there. Let's see. And then that's why we have the bloodhound templates, right, on the row 2 and the row 1 to look at all the different volume and divergence signals from the different charts, and then depending upon which chart is the operative time frame, that determines which charts are necessary to get those volume signals on. And see here, we don't have the you've got volume divergence there, and you do have an extreme climax, but with the minute charts, a lot of times you'll get that 2-bar pattern kind of all happen on the same bar. And, the tick-based charts will separate those bars out once a certain number of either ticks or range or time passes on the row bars. So it's just slicing the data up a little differently. And there's really just something about those tick and row bars that slice the data up a bit nicer for the volume. Whereas I'm getting a lot of great signals that I'm getting a lot of those great signals on the tick-based charts that I'm just not getting on the time-based. If that makes sense. You follow me on that though? It's a little, I'm not explaining it the way that I want to. Basically, there's a lot more price movement back and forth that you're not really seeing on the time-based charts. Like you see how that wick, it's closing way up off of that wick. The row bars and the tick bars aren't uh, really going to show wicks like that. The row bars might, but the tick charts aren't. The tick chart will close it and open a new one before you get a whole lot of that movement back and forth. That's why you don't really get wide-ranging bars on tick charts, because they're built from the total number of transactions. Whereas a time-based chart, it's just time period. That's it. So there's no taking into account the total movement back and forth, the total number of ticks or transactions or volume. And then on the row bars, we're taking all of that into account. So it's just slicing the data 3 different ways, basically. And that becomes more and more important when you're looking at volume, to get a good slicing of the data, a good sectioning of the data. Otherwise, there is randomness to just purely the periods of the charts that you're using. I mean, why are we using a 2-minute and a 5-minute and a 15-minute as opposed to anything else? I can pull up some reasons for that, but if we slice the data in different chunks and in fairly consistent, ratios between those periods, then we'll have a lot better idea as to what's actually going on in the volume and the price action. Otherwise, we're getting, just a small glimpse into what's actually happening in the price action and the volume. And that's why people that are, trying to use volume on just 1 or 2 charts and that's it, it's never really going to be all that useful to them, because they're never seeing the full picture. The bar is closing just randomly every whatever chart period they're using, every 5 minutes or whatever, 15 minutes. And they're not seeing any other version of that data or different sections of it. So we're trying to make sense out of, what's considered to be random by most people, by a lot of people anyway, academics. But it's really not purely random. If it were purely random, then nobody would be making money from day trading. And there's a lot of people that do. So especially when looking at price action and volume, the sectioning of the data becomes more and more important. I wish I could flesh that out a little bit better for you, but right now that's the best I can do. Tom, yeah, I am. Yeah, sure, Jordy, no problem. Yeah, I'm still using that Blackbird chart. Yeah, I haven't shown it today. This is just a sales webinar. This isn't a training session. I guess it's become a training session, but yeah, supposed to be a sales webinar. Hey, Bobby, do I need to change setting for volume on 4x? Or just based on tick? Yeah, I've got, hang on a second. I got it here somewhere. Excuse me. Yeah, here. These are the settings. And then I'll have a workspace for the Euro USD, this one here, coming out today. I love you too. I miss so much of what you guys have written here. Indicator at the bottom of my charts. This one? Bottom of my charts. Oh, you're talking about the divergence indicator, I guess. George, huh? George Motto. I think you have it, don't you? I want to say you do. Thanks, Stephen. I'm just skimming through this. I've missed so much. If I've missed your question, can you just post it again for me? I'm going to answer some more questions and then I'm going to call it a wrap here. Thanks, Vadim. Appreciate that. Yeah, we put a lot into it. You know as well as anybody. It's taken a long time, I know, but it hadn't been easy. Yeah, I appreciate it. Yeah, exactly. Yeah, only for, right, Analysis Live is only for NT8. Yeah, NT7 is based on dated technology. It's .NET 3 point something. And all the server stuff that we're using, they all made it mandatory to update .NET about 6 months ago. So none of the servers that we have found, none of the managed servers that we have found will even let us use what we would need to for NinjaTrader 7 anymore. So we can only do the Analysis Live for NT8 from now on. All right, cool. Appreciate it, Rob. Yeah, I will be too, Bobby. For sure. Yep, you're welcome, Ava. You're still using NT7, I take it. You got some tools that haven't been updated yet. Yeah. Yeah, I mean, well, I was gonna say there might be a way to make it work, but I don't think we can safely say that that's gonna happen anytime soon. Vito, no. The only difference is you have to click on recalculate. So after it finishes loading, that's really the only difference between NT7 and NT8 is you have to click on recalculate. So once you've loaded any indicator into that replicator and you finish loading it, just click on recalculate either from the toolbar or from the reader manager itself, which is right here. Excuse me. Sorry, I'm trying to drag this window over here. And I've opened up a strategy something or other. What in the world? I don't know what I ended up opening the wrong window. But anyhow, you know what I'm talking about, the reader manager. So you'll just, once you load anything into that replicator, then you just click on recalculate and you should be fine. Yeah, I'll send it to you. Yeah, it is, James, for sure, especially when I don't have it all, refined and I know exactly what I'm going to be saying. It's all off the cuff. So not exactly the best way to do a sales webinar, but anyway, there you have it. Yeah, Stephen, I'll take care of you. To see historical signals on the entry chart, Tom, yeah. But you'll always have to do that because each of those Bloodhound templates is reading another Bloodhound template. You understand why, right? Because you've got the replicators inside of those Bloodhound templates, and each one of those is reading the preceding Bloodhound template. Yeah. Yeah, there won't be a way around that until we drop Bloodhound. Which, I mean, I'm not going to drop it, but I'm saying until we build two of those templates uh, as an indicator or strategy or something. Yeah, but that's just for the historical, right? To see the historical trades, you could combine them all into one template, and then you wouldn't have to do any of that. But I separated them so that you could know when one part is getting the signal and the other part isn't, because everybody was wondering, why am I getting no signals? Well, you're probably not getting any signals because you're not drawing the market geometry, or you didn't draw it properly, or you didn't have enough of it on the chart to trigger the rules. So at least this way you can have the market geometry separated out in one template, the volume in another, and the operative time frame rules in another. Oh, you do? Okay, cool. Yeah. Are you using it to access other bloodhound signals or just regular indicators or something? Yeah, that replicator is pretty awesome. Pete, it's just for the S&P 500 and crude oil. Just those two markets for now. Hmm. I haven't really gone over the pricing for that, but if you're joining for the first time, you'll get the first 3 months free. We were talking about doing $99 a month for each individual market, but we're going to kind of be restructuring some of that. So that's likely not the final price. It's going to be a little bit less than that, but we're going to do a webinar on just the analysis live, I think probably Friday. And then we're extending the sale until the end of the weekend, next weekend, since I've not been able to get everything done that I've wanted to do. and ended up getting sick for 2 days. Well, 3 days basically. Yeah, we're going to extend the sale to the end of next Sunday, and then between now and next Sunday, which will probably be Friday, we'll do a 30-minute session on the analysis live. The two markets that we'll be doing first will be crude oil and S&P 500, and I think we'll probably add in the 6E and gold later on, maybe like March. Yeah, good. Yeah, Thomas, there's not a completely step-by-step manual. I want there to be one completed, but there almost is. I've got let's see, let me just show you what I got. Got about 85% of it. Some of the content on the site needs to be updated. Some of it's not even on here actually, but it won't all go out tonight, but a chunk of it will go out tonight on, oh, hang on a second here. Whoops. I think I just messed up. Okay, good. Okay. Yeah, I've got a bunch of guides for all the tools, toolbar, Blackbird, data feeds, market geometry, import manager, divergence, volume, replicator. These are the change logs for all the indicators and tools. And then here, some of this is kind of old. I mean, a lot of it is, methodical. It's methodology stuff. It's not necessarily dependent upon the tools. But yeah, I've got rules and guidelines and a lot of different videos here, but this is not everything. I've got a huge document with all the rules and guidelines that I'm going to be releasing tomorrow, probably. The ones coming out today will be for the import manager, and then the Bloodhound and Blackbird templates. The big one will probably be, honestly, it'll be at some point next week. There's no way I'm going to be able to finish it tomorrow. So, but yeah, over the next 10 days, there'll be a ton of new content going up. Yeah, it's a lot. It's a lot. All right, I'm gonna go ahead and close it down, guys. If I haven't answered your question, then could you write it in to info@tradetheplan.com, please? And then you can also just give me a call now. And you don't have to own all the tools to be able to get the analysis. You could just own the toolbar and then be able to sign up for the analysis live only. You wouldn't be able to sign up for the trading room, and you wouldn't get all the Bloodhound templates and everything, but you would at least get the the market geometry, volume profile, and fibs and Elliott wave and all that stuff directly to your charts. So you would only have to own the toolbar to be able to get in to the analysis live. I'll give it a couple of minutes and I'm going to close it down. Thanks for coming, you guys. I'll talk to all of you in the trading room on Monday. All right. Bye, everyone.